Trump, with President-elect Trump coming in, would software be able to make a run?
The moneymaker is the software that they provide to advertising.
I've been trading bond futures and interest rate futures for 35 years at the time, and I had never actually bought a bond.
I can't tell the difference between the performance of AMD and NVIDIA chips. I just know I need more AMD chips.
That you're dumb or that your pedigree is not appropriate to understand blockchain. I said, you may not understand the value proposition for Bitcoin.
Donald Trump, all his demand side policies can be implemented rather quickly.
We heard automatic gunfire outside of the rental house.
What we saw from the TCJA, even though there was obviously repatriation in there, we saw corporate tax receipts go from 200 billion to 400 billion last year.
Welcome to Futures Edge. I am Jim Urio. That's Bob Iacino. Today we have a special guest, the CIO of Laffer, Tengler Investments, and the author of The Woman's Guide to Successful Investing, which, by the way, should be an interesting book. I have not read it yet, but I'm going to. And women tend to do better because they're not so goddamn impatient like men are. And I'm sure we'll go over that in a little bit. Before we get started, I do want to thank you guys. This has been a tremendous success for us, and it's because of the support we get from you guys. All the DMs, the retweets, all the recommendations you guys give to your friends. We cannot thank you enough. Please support our sponsors, Hardcore Italians. Christmas is in 2 short weeks. The present for any Italian on your gift list can be found at Hardcore Italians. Use our code. Bobby, you say the name of the code. I can't do it with Nancy here.
Go to hardcoreitalians.com/FU. The discount code is FU. And it does, Nancy, just so you know, the name of the show is Futures Edge Finance Unfiltered, which is FU.
Yeah, well,
Not
sure.
the other
Sure.
Fish.
So, Nancy, the first time maybe you and I were on a show together was because we were all in that Larry Kudlow orb. And I remember 5-6 years ago, I had no idea who you were because you're not as, like, I post everything on Twitter and I'm a loudmouth. And I was like, okay, who's this person? And then I realized quickly that you were so incredibly smart that I feel stupid when I'm on shows with you. So I'll ask questions today and just shut up. So what are you working on now? Are you still in New York? Are you you're
No,
still
I'm
part of
in
Laffer
Scottsdale.
Tengler, right? Are you really?
The firm's in Scottsdale, and then I spend the summers in Tahoe, in Incline Village.
Oh, that's fantastic. I love
Yeah.
Lake Tahoe. I was there
Yeah.
for a wedding about 2 years ago. And which the bad part, I have a home outside of Winter Park in a town called Tabernash. But when you see other great mountain places, you know you're not going to go back because I don't even go to my own place enough.
Right.
You know what I mean? So I loved Lake Tahoe. Lake Tahoe, that was really good. The lake itself is fantastic.
Yeah, and I'm on the Nevada side, so there's no state income tax, as in Laffer.
Nice.
Yes. So that's Art you work with, or the son. What's the son's name again? Art Jr., right?
Yeah, they're not very creative. Arthur B. Laffer Jr.
Right, exactly.
And then there's a third. I'm sure there'll be a fourth.
You know, I had when Larry was retiring from CNBC, he scheduled a dinner with Stephen Moore, Art, myself, and that guy, the grocery store guy, I can't remember his name, who was running for mayor.
Yeah. Yep.
And so it was the 5 of us were going to dinner, and I'm go to the airport to get on a plane, and some Yahoo started a fire at one of the air traffic control towers in the Chicago area. So I missed my dinner. So I've met Art, digitally, but that was going to be my dinner with him. So that bums me out because I think he's a good man.
He is. They're great peeps. All those peeps are great peeps.
Oh, yeah. Yeah. Well, Larry's one of my favorite guys. He has been for 25 years.
And Nancy, I wanted to ask you, because we're talking on one of the networks, I don't remember which one it was, but you were talking about a particular portfolio, and unfortunately, I can't remember the name of the portfolio either. But in there, you had
very well, gentlemen.
So we set this up great.
It was in there. The question was about software in 2025, and with President-elect Trump coming in, would software be able to make a run? One of the companies I know was ServiceNow. Another one was IBM and Adobe, and I don't remember the fourth company rather that you talked about. Can you tell me about those particular, whether they're investments or recommendations, what you think of them still to this point? Because I feel like that clip was from about 2 or 3 weeks ago.
First, I kind of want to make my chops as an honorary Italian.
Here we go.
Tell us more.
I'm married into the Agatucci family of Aggies in Peoria. It's an old Italian restaurant. The kind with not your kind of restaurant, Jim, the kind with formica on the tabletops, and haven't made a change in over 100 years, and they just keep bringing.
We will accept you into our clan.
Thank you. Yeah, so I think probably, Bob, I was talking about our 12 best ideas portfolio.
That's it. That's
and in that portfolio, we have, well, among other things, our 12 best ideas, but it is pretty heavily weighted to technology. And the names that we own, we do not own IBM anywhere, but we do own ServiceNow. It's actually our largest holding due to appreciation. And just think of them as sort of the train conductor on the generative AI cloud computing base of the enterprise. And then we also own Palo Alto Networks. We own Microsoft in that portfolio. We own Amazon. That was probably the other name I mentioned. And then we own some other consumer discretionaries, Chipotle, Home Depot, but also Uber, Adobe, yes. And I think that's it. And Broadcom.
So what's sort of the future value proposition of a company like Adobe? I mean, I never use their products except to sign documents. So I'm curious what's their value proposition going forward?
Yeah, so that they report tomorrow, and we were just talking about it in our analyst team meeting. They have Firefly, which is, I want to draw a picture of a fairy forest with a unicorn, and it just generatively AI appears. The question is right now they're sort of giving the product away so that they can gain market share. And they've disappointed a couple quarters in a row. If they disappoint again, it will no longer be a best idea. We may still hold it. It is the artistic side of the business that they're focused on, in addition to Adobe, that we all know and use every day. But the moneymaker is the software that they provide to advertising, and we'll see. I mean, it's been a disappointment for the last year, so there may be no value proposition.
No, I actually like the stock from a charting perspective right now. I was looking at it a little while ago as I was thinking I should ask you this question, and it's really kind of broken out. I mean, it's pulling back the last couple of days. And again, everybody, we're talking to Nancy on Tuesday, the 10th. So you're not seeing this. It's probably the 17th or 18th if you're watching this at its earliest. But it's doing that sort of breakout and pullback that I just absolutely love. And I was really happy to hear that you guys owned it in your 12 best ideas because the chart looks spectacular to me.
It's a great management team. They sort of led the subscriber based software model early days, and now they're trying to transition into this generative AI, supplying to the commercial artists that design a lot of this stuff. And it is cool. Like if you go onto their website and use it, it's a cool technology. The question is, can they monetize it?
And you think we'll know tomorrow, right?
I think we may know a lot more tomorrow. Yeah, because they've basically said that we want to get people using the product, and then, the old bait and switch, right? So hopefully, even if they disappoint tomorrow, if they give better guidance, I think then we're off to the races.
Right. It's the old heroin dealer business model. Give the product away for free, get people hooked, and then go get them. So yesterday on Monday, just for technical reasons, I made this trade. And by the way, my lawyers, Mark, Stacy, I'm not recommending any individual stocks. My license is for futures. I'm just saying trades I did. I want to know if Nancy thinks there's a fundamental reason for it. From a technical standpoint, I did not like AMD anymore. I've had the stock for probably 7 years. Got out of some of it along the way. It started out as a trade, turned into an investment. I got rid of my last of that and replaced it with Apple and Google. Yes, I did replace it with Google. I've sold a 1-by-2 call spread that is doing extremely well today. I had no idea they were going to, have this. It's better to be lucky than good. But anyway, the point about it selling AMD, the chart looked terrible to me. Is there a fundamental reason that AMD is starting to lag more?
Yeah, I mean, I think the last quarter was pretty disappointing, and the guidance was, and the stock has underperformed this year for sure. But if you think about it in the grand scheme of the spending that's going to take place in generative AI, in the chip side of AI infrastructure, then I think you have to say, is AMD able to grow pretty robustly with table scraps from NVIDIA? The answer is yes. I mean, we now know that Intel's no longer part of the equation. We were out of that stock 3-4 years ago, and you had a management team that just missed it. So think Xerox, who developed the mouse but didn't commercialize it. They left that to Apple and Microsoft. That was the Intel spot. AMD, I mean, their products. One of the analysts, one of his close friends, works in infrastructure, AI infrastructure at IBM, and he said, look, I can't tell the difference between the performance of AMD and NVIDIA chips. I just know I need more AMD chips. So as we go through this cycle and Blackwell is backlogged, that's the NVIDIA chip, then I think you continue to see AMD perform. It got ahead of itself. I think it can perform again, but in the short term, I think your trade was the right one. We've been adding to Google as well.
Good. And I will look at a spot to pick it back up again from a technical standpoint, which brings me to my next question. When you are doing your analysis, is there any component of technical analysis in it as well, or is it strictly fundamental?
It's fundamentals, but then we pay attention. So our research is fundamentally based, but then when we're adding to positions, we do look at the technicals. So when we were looking at Tesla, remember when Elon was selling all of his shares to buy Twitter and everybody's making fun of him for multiple reasons, and the stock got down to about 108, 103. That was when we were talking to one of the technical analysts that we work with, and that was when we began to add our positions. And so especially in these volatile names at turning points, you can do all the fundamental work you want, but you can be really wrong. And so the technicals are an important marriage to fundamentals, in my view.
Kind of funny. Like people think that insider selling and insider buying is just a blanket signal. If an insider is selling, the stock's in trouble. If an insider, well, I would argue that insider buying probably is a one-sided sort of a conversation, but insiders can be selling for any number of reasons. And people seem to ignore that. I know that Jeff Bezos sold a bunch to build a yacht for his new wife, if you can even call that a yacht. But I want to talk macro real quick. We have Scott Bessent coming in, and he's talking about his 3-3-3 plan. And there's a part of it that I want your macro opinion of. So it's 3% budget deficit of 3% of GDP, 3% GDP growth, and then 3 million more or excess barrels of crude oil per day than we're already producing. I assume today's the mark. And when they come in, that's going to be the new mark. That kind of a cut, I think that the Congressional Budget Office is projecting about 5.1% for the next couple of years, somewhere in that range, 5.16% debt to GDP ratio. Do you worry about a fiscal drag in terms of getting that 3% GDP growth?
Well, so Bobby, I mean, what's weird to me is that, did you see the Atlanta Now? They just raised for fourth quarter to 3.3% from 2.8.
Yep. I just saw that.
I've been making this argument that this environment is analogous to the 1990s when I was not only alive, but managing money. You had, higher interest rates, 5 to 8% on the 10-year. The Fed funds rate was about 5% for the almost the entire decade, I think. Inflation averaged 3%. We had an inverted yield curve, labor shortage, and productivity. And so I think we've been hanging our hats on productivity. I think that's what's bailed out the economy so far. That really is what drove the soft landing, not the Federal Reserve, which I think has been wrong at every single turning point. Yeah, I mean, I am worried about it, but I think what we are going to end up with is tax cuts, whether we deserve them or not. We're going to end up with some pretty significant deregulation. And while that's difficult to quantify, and we know the CBO always gets it wrong as well. So I think that I love the whole analogy about the Department of Education when they introduced the concept of student loans, and they said they were going to make, I can't remember exactly, but like $8 per $100 lent, and they actually lose $7 of every $100 lent. And that doesn't count the forgiving of all the loans. And so, you kind of go back and everybody repeats, especially in our business, they go on the air and they repeat this stuff like it was gospel. And then nobody ever goes back and says, hey, by the way, that static scoring that you did was completely off base. So I'm still pretty optimistic. Yeah, I mean, the debt level, the deficit, all of it is outrageous. If we ran our businesses that way, we'd be in debtor's prison. But all we hear from these people is, greedy businesses, greedy corporate America. What about greedy government?
So we agree that these cuts need to happen, right? We need to get the debt to GDP ratio quite a bit lower. But how quick do you think the conversion to that private sector growth would be? So the reason I bring this up is I've been saying lately that I think we've got a 15, I might have said this on our call, that we have a 15 to 30% drop in the equities coming. I don't have a time as to when it's going to come. I have no idea, because a lot of it has to do with how quickly we get tax cuts, how quickly we get Doge cuts half the government spending, right? How quickly any of this stuff happens. There's no way to know if any of it's going to happen, and if so, how quickly it's going to happen. But if we're successful at getting 3% debt to GDP from wherever the accurate projection would be. Is there sort of a transmission mechanism for how quickly private companies or private corporations can pick that spending up? We know they're going to get more out of those dollars if they're given back. I just hope they don't put it all into stock buybacks.
Yeah, why not?
That's a good point. I own stocks. So that's a very good point.
I know a couple things. That there's a bunch of money, billions, tens of billions, maybe even hundreds of billions that have been allocated and not spent. So it seems to me that's the first place you go and you say, okay, we're not spending that money. And then it ultimately returns to the private sector. If you cut corporate taxes, I mean, what we saw from the TCJA, even though there was obviously repatriation in there, we saw corporate tax receipts go from 200 billion to 400 billion last year. So that's good for everyone.
We talked about that almost every show. Go ahead.
We do. Okay, sorry.
No, not about that specific act, just about when you cut taxes, receipts go up.
Yeah, we've read all of our Laffer's books. Yeah, right.
Well, it was funny. I was cleaning out one of the offices here, and I was like, "There's my napkin that Dr. Laffer signed." You know, he uses the Margaret Thatcher quote, which is "Socialism is great until you run out of other people's money."
I can add to the question though too, because there was one thing I wanted to add: is that small business optimism. Did you see that print today? The print was absolutely blockbuster. One of the biggest 1 month jumps ever. That is a highly political data set. They want to believe that the person in the front office has their back. Will that transmit fairly quickly into expansion in the small business world, do you think?
I do, actually. And if you look at the consumer confidence, all income cohorts were up in the last reading. So, lower income, higher income. But I also think there's something interesting that this administration, this is not his first rodeo. And I think that is critical. Plus, he's put together a team of hard charging people. So it's not just Elon and Vivek, it's, RFK Jr. I don't know how you quantify that one economically, but I think it's going to be powerful for ultimately for the healthcare system in not a good way. And so I think you have to step back and say, did they learn from previous administrations? As this election was going on, I've been reading Ken Kachigian's book, Behind Closed Doors, and it's the Richard Nixon, but mostly the Reagan years. And what I'd forgotten was that when Reagan went in, Jim Baker and all the sort of establishment cohorts encouraged him to do the TEFRA tax increases. And remember, the stock market in the first year and a half of his administration went straight down. They phased in the tax cuts. If we get tax cuts immediately, and by immediately, I mean by the third quarter, I wish it was by the second quarter, but if we get tax cuts and they make permanent the individual tax cuts, and we get some focus on, you get tax incentives, go back to 100% expensing on CapEx, I think that has a profound impact. And I hope, Bobby, you're right, and we get a 10% correction. I hope you're wrong and we don't get a 25% bear market.
Also think that if we get 15 to 30% correction, it's because everything happened very quickly and it's a multi-decade buy, wherever that bottom is.
Yeah.
Now, I won't pick the bottom. I never buy bottoms. I always wait for things to turn and go back up, which is why I don't own Adobe yet, but I may soon.
Yeah. No, I think that's smart. I mean, I'm a value trained investor. And so that gets beaten out of you after the first or second bear market because you end up getting in too soon, right?
Yeah.
So I think it's important to wait for the momentum to shift. Absolutely. And also not to poo-poo the value of growth. And so, if you look, I've been talking to people and I write about this in my book that since the IPO, and it depends on the day you're measuring, but Amazon since May 15th of 1997, when they went public, is up something like 275,000%. So when was it too late to get in? And I think that when you're talking about great growth companies, and Adobe has been one of those, I think NVIDIA remains one of those, Tesla is one of those. When you start talking about those kinds of companies, then you don't have to get too greedy in waiting for some perceived bottom. In those cases, I think you might even start a little bit earlier. But recently for one of my kids, I bought some Tesla at like 210, and I felt like a moron when it got down to 180. But I'm feeling okay now.
Yeah, you should be.
Yeah, and so I think it depends on your time horizon.
So we've talked a lot about technology and growth, which I'm still in. Like I said, just yesterday I bought Apple and increased exposure to Google through options. But is there any other sectors that to say this has been a sea change over the last 2-3 months is an understatement. I mean, to think of where we would have been from a deficit standpoint, I would have put way more allocation into gold had the election come out separately. I think that Donald Trump is okay for gold. I think that Kamala Harris would have been spectacular for gold for all the wrong reasons. Are there any other sectors that you look at and say, okay, Donald Trump could have a profound effect on this sector, positive or negative?
Yeah. So let's remember when he came into office the first time, everybody said that financials and energy would do the best and that technology was to him as energy was to Obama. What was the best performing sector? It was technology under the first Trump administration. And financials and energy, for reasons we know related to COVID, performed less than half as well. So I do think that in this environment, you do want to be overweight industrials and you want to be overweight consumer discretionary, along with, I mean, the obvious is financials, classic cyclical, and you want to be overweight technology. But what's important to us as investors is our investing theme is old economy companies that have pivoted or are pivoting to the new technologies, and then the suppliers of the picks and shovels. So the old economy poster child for us is Walmart, which has been an overweight and, is up, 60, 80% this year. They pivoted, Kohl's didn't. They pivoted, Target didn't. And so those are the kind of companies we're looking for in industrials. So think Emerson Electric, Quanta is building the electrical grid infrastructure. You want to own some of those companies that are going to benefit from higher electric utility usage, not thanks to renewables, but thanks to the data center growth that's coming from generative AI. And then we have other names that we are overweight as well. But I think those are the spaces. That's where we're overweighted. We're underweight consumer staples. I just bought an electric utility for the first time in 35 years. Wow. But generally speaking, we don't, we're not interested in REITs and electric utilities. We want to be where the growth is.
I want to paint a picture for both of you, actually, Jim and Nancy. First answer from Nancy, but let me paint the picture first. 2019, the New York Times wrote an article that said, face it, you probably got a tax cut, right? So all the fear of tax cuts for the rich, he only gives tax cuts to millionaires and billionaires and all his friends. And then the New York frickin' Times writes an article that says, face it, you probably got a tax cut. I think part of the reason that what we call the legacy media instead of the mainstream media, the legacy media that Jim and I are completely crushing. Part of the reason they failed in a lot of what they did this year is because of what you said, Nancy. He had a term already. So every time they said something, we're all like, it wasn't like that from 16 to 20. So what are you guys talking about? He's going to do this. He didn't do that then. Why would he do it? So I think that has a lot to do with why he won. So looking forward at what he says he's going to do. He's very clear about deregulation. He's very clear about tax cuts. He's very clear about looking toward wasteful government spending, and he's very looking toward cutting it. And he's very clear about drill, baby, drill. What I worry about is because I believe inflation isn't quite beat yet.
Agreed, 100%.
Okay, you agree. He's about to do all this pro-growth stuff, right? And the only place I see sort of an inflation fighting component is in energy. As Jim has pointed out in the past, which I'm considering as a credible thesis, when gas prices go down, people have more money to spend. It might even be slightly inflationary. So do you guys think that President-elect Trump and the team he's putting together have sort of an eye on what if we pump inflation up again? Is it all about wage growth, Nancy?
Yeah. Well, I think it's a real risk. I think you've identified the single most important risk to the economy because you've got a Federal Reserve that's determined to cut rates because, they're data dependent, except they've never been data dependent. So we got the 50 basis point cuts out of the gate and everything's looking good. And then we got another cut and now we may get another cut. And that will also, I think, put us in a position where inflation could rage as the economy continues to do well. Financial conditions have already eased, as you both know. Credit spreads are super tight. So I do think that that is a risk. Now, I'm with you on energy. The one mitigating factor is we may shut down Iran. We may put sanctions on Russia. And yeah, China will still buy the oil, but maybe we won't see as much of a collapse in prices as we're kind of thinking we will. But I think it's definitely a risk. And so the question is, if you can pull some of the spending away from the government, that may help also mitigate inflation. Because remember, it really took off when the Inflation Reduction Act was, again, air quotes, was passed. And we had $1 trillion in spending. So if they can pull some of that out of the system and we can get quantitative tightening to continue. Our fixed income guy thinks it's not going to continue. But I think financial conditions have become too loose. And our team argues that the reason that the Fed's so determined to cut is to bail Janet Yellen out, who's been issuing it at the short end. Is that what you say?
That's what I say all the time too. Yes.
Jimmy, that was an
I think he
exceedingly
feels.
short question for me. Do you even remember it?
What's me, the question? Yeah, I don't care what the question was. I'm just going to say
Yeah,
what I want to
listen.
say because I do have something to add to this, which, by the way, I do think that's one of the main reasons that they are easing. 1.4 trillion debt service in 2025. I think that had the election gone the other way, we would have had quantitative easing in Q1, I think. And I don't think we're going to have it now. Let's go back to the 80s. Paul Volcker gets credit. Ronald Reagan gets credit. I think, and I give them credit, and I don't want to challenge the orthodoxy of our side, whatever that is. I think the internet deserves far more credit than it's giving for destroying the inflation of the 70s and just having unbelievable productivity growth. Now I look at where we are now, and again, AI, it's just what we're seeing as an exponential growth beginning in computing and the capabilities of it. Is AI, as it gathers steam, a powerful enough disinflationary tool to figure into your thesis on inflation not running away? It is, right? What level compared to the internet?
So I'll just use John Chambers as my example. So remember, Cisco was the poster child of overvalued companies in March of 2000, 100 times earnings. He has recently said that generative AI is more powerful than the internet and cloud computing combined. Today, you had the CEO, Bill McDermott of ServiceNow, saying we're going to be spending $20 trillion between now and the end of 2030 on building this out. We're seeing it at the company level, the companies that are employing it and then citing it in earnings calls. So American Express is improving fraud detection. You've got Walmart who said, they could chronicle, I don't know, I can't even remember the numbers, like millions of.
B of A got rid of 1,000 employees, right?
Yeah. And so, but then you're also seeing like studies from the Richmond Fed that are saying, it's improving product development. 57% of companies say that. 70% said it's improving client service. So I think as it gets more sophisticated and we adapt to the use cases, like I was just met with somebody who's got a product for us people, that it kind of draws from financial sources and kind of emulates Bloomberg instead of scraping the internet. So the data is reliable and sort of quantifiable and known. And so if I can type in, what did Jim Iurio say the last time he was on Kudlow, and it brings it up and it's pulling it from a financial source, that's really powerful to me. Because
so if it can replace Bloomberg and I can get rid of my 2 goddamn Bloomberg terminals that cost $3,000 a month for my employees, that's nice. To answer your question, Bobby, is I believe that that's a powerful enough force to stop inflation from running away. I do think that 2.6 to 2.8% year over year is probably what the Fed even wants for the next 5 years, oddly, to try to grow us out of this shit. Oh, by the way, my daughter, she's a financial professional. She works for a company that owns a bunch of tollways. And her group went out to a bar the other day with all in their dressed up financial stuff. And she said there was some drunk girl at a bar who leaned over to her boyfriend and said too loudly, "See all those people? They're going to be replaced by AI in 6 months." My daughter thought that was quite funny, right? And maybe it's true. So she better get on board with trying to figure out a way to fit in.
But look, you saw the headline about Amazon, right? Where they got this new robotic warehouse, and it's going to be completely robotic, and they're going to hire 2,500 people to run it. So so there'll be jobs. They'll just be more efficient jobs. And that's what we're seeing at Walmart, for example.
Okay. So I want to retrace something that Bobby was talking about before about Donald Trump. All his demand side policies can be implemented rather quickly, like cut taxes right away. We saw small business optimism shoot higher. The supply side solutions to inflation might take a little bit more time. Do you see a scenario where if he cuts taxes and all of a sudden deficits increase on the short and somewhat medium term, global demand for our bonds, do you see a scenario where it could increase, knowing that the globe is thinking we're on a better path, despite the fact that we're running bigger deficits?
I do. And I also think that if we race to the bottom, if we go to 18 or 15%, we're now the lowest taxed corporate tax in the developed nations. What does that mean? That means that we're going to see other countries do that. And that might finally help global growth, which will drive energy prices up. And it'll just be like a super happy 4 years, and then I'm done. I'm out.
Time out. Drop the mic. I'm gone.
Nancy, where do you guys fall on crypto at all? I'm not asking if you guys are invested in it, but actually, it's funny. I had a conversation with a really good friend of mine today, and I told him he's completely anti-crypto, and I understand that. And I told him I just not sure if you see the use case. And he said, I'm very smart. Basically, it was longer than that, but
Is that me?
no, it wasn't you. I said, you're missing my point. I didn't say that you're dumb or that your pedigree is not appropriate to understand blockchain. I said, you may not understand the value proposition for Bitcoin. I'm not sure I do. Where do you guys fall on it?
So we just had a discussion about this today. So early days, we said, okay, well, let's own some of the stocks because we don't own gold for our clients either because we can't hold it. So,
Okay.
We've got high net worth clients. We've got, custody. We do their total asset allocation. We don't discourage them from owning gold. I certainly think there's a place for it, but it's not part of our allocation. We do talk to them about it. I think Bitcoin I think it's a risk asset like gold, like gold that you can't value it. It's supply and demand, it's emotion, it's animal spirits, and I think it's real. And that if you don't want to own it, you don't have to own it. I mean, we're in a bull market, so I think you can make a lot of money other places, but there's no reason to say I'm not going to own it. And we're trying to figure out how we can expose our clients in ways that maybe with a collection of stocks or an ETF, one of the ETFs. But I think we're way past, I don't get it. It's not real.
Right.
Because it is.
And again, my contention there has been, I don't care. You know what I mean? Once BlackRock announced several years ago that they were increasing their footprint in the space, I rushed to it. BlackRock, we all work for BlackRock, just some of us know it and some of us don't. And now the second most powerful institution in the world, the United States government, getting involved with it too. That's a joke, but it's not as much of a joke as I want it to be. But does Nancy Tengler, in your personal assets, own any crypto or no? Or if you don't want to say, that's fine too.
Yeah, no, my team got this for me. It's a
Nice.
Yeah, it's a fake Bitcoin.
Okay.
I don't. I wish I did. You can't do it all on building a house. So at some point you go Bitcoin, marble in the bathroom.
No, I get it. Yeah.
But I think people should own it. And so getting there, and you were smart as you always are to get there before everyone else. But yeah, we've been late to that party, to be honest.
Well, how do you obviously have clients that say, I don't understand it. I don't know what this is. It's backed by nothing. Do you just go, no problem, we'll look at gold? Or do you try to make a case for it, or neither of those?
I think, again, remember the Amazon analogy, up 275,000%. I think the time has now come when you've got people in government that understand it, and you've got an SEC that isn't, objecting and putting up roadblocks. And I think it is time to step back and go, we should probably have a position on this. And that's what we were talking about today, and a way to expose our clients to it. I think the importance of Elon in or around government is huge. How long have we had social media? Like 20 years?
Too long.
And Congress still hasn't figured out how to regulate it. So to put them in charge of crypto was never a good plan. Let's get some understanding. If the government wants to put it on its balance sheet, great. I'm all for it. I think you just have to be open to the idea, and it's not a religion.
Yeah, that was going to be a comment that I was going to make after you were done, is that, I think the mistake people make in the space is this is going to replace the US dollar. Fiat is gone. Gold is gone. Bitcoin's going to be the only thing. No, it's not. Okay, to me, neither one of those things are true. But that doesn't erase the idea that Bitcoin can be an asset, because quite frankly, anything digital or otherwise, if there's demand for it and there's limited supply, the price is going in one direction as long as that demand sustains.
Tulips, beanie babies.
Exactly. Anything that sometimes when it trades above whatever their actual value is based on a revenue stream, based on whatever, then there's an element of the greater fool. There's an element of, like baseball cards, the Honus Wagner card.
Right.
Like it's just based on the fact that someone else will buy it from you at a valuation of $3 million. Why can't
I own a lot more gold than I own Bitcoin, right? But this is something Jimmy and I have talked about a lot, is the generations behind us. They don't understand our generation's fascination with jewelry or diamonds. Or like I could see a future where gold doesn't matter to anybody. It's like, what's this? Shiny, soft metal, whatever. I don't need
A
this.
quick aside on that, Nancy. There's two different kind of Italian Americans. Bobby's the gold necklace Trans
Yep.
Am driving Italian, where I'm a little bit more sophisticated.
I'm also the one that when you ask me if I'm Italian, my answer is always the same, 100%. I don't want anyone to think there's any
I
little
only
speck
become
or
an
anything
actual
else.
dago when my wife and I go into an Italian restaurant. And then she's like, we'd been dating like 2 years, and we walk in an Italian restaurant. I'm like, hey, how you doing? I'm giving people money. She's like, what are you doing? Who are you?
For you.
I'm going, listen, I'm going to say hello to the owner. You don't know the owner. Hey, don't worry about it.
This is when I'm so glad I'm Irish.
You don't have to be pulled by those
You
forces.
should
We're
be.
just drunk all the time, so we just, we laugh.
Yeah, no, I got part of that in my family too. I had a question about bonds. Let's pivot to there for a second, because the three of us, we've been around a long time. 2 years ago, a buddy of mine's like, yeah, no, I'm buying bonds. I'm like, okay, I'll do that too. And then I realized I had never I've been trading bond futures and interest rate futures for 35 years at the time, and I had never actually bought a bond. I was like, how do you buy a bond? And he walked me through it. But anyway, so the notion of dry powder, we talked about it for 15 years after 12 years after the financial crisis. That dry powder was earning zero in bank accounts. That dry powder is not it's perfectly comfortable owning 4.5% in a 2-year right now. Have you guys changed your allocation and the way you do things to having money put in, and what durations are you looking at? Something like, I don't know what the question is, but you'll answer it anyway, I'm sure. Yeah.
Let's make something up.
Right, exactly.
So we took our clients out of bonds. Remember when the 10-year treasury, the 10-year treasury yield got to 50 basis points? I feel like that was August of 2020. So we took them out and we moved them in converts and we, some other areas. And then as yields came back up, we started just laddering very short treasuries, not sophisticated. That was the first time in my life I've owned a bond, because we invest alongside of our clients. So that was a couple of years ago. And now we're moving into munis and corporate muni callables and corporates to some extent, depending on the client's tax situation. We're out about 3 to 5 years. Our head of fixed income thinks that the 10-year is going to stay higher than the rest of the market thinks for longer. And that would fit the analogy that I have of the 1990s, where, if we hover between 4 and 4.5%, he can do really well with callables and pick up, a fair amount of yield without taking on. He's not a total return investor. He's an income investor. So I think you still want to be in bonds. Again, I'm now, I sold all my bonds when the short end of the curve started coming down, and I'm basically 100% in equities and marble for my bathroom.
So equities in real estate is what you're basically saying.
Yeah, I just think in the bull market, if you have I'm old enough to have an allocation to bonds, but I think these are legacy assets for me and for most people. I mean, we tell our clients when you retire, it's 20 years of unemployment. So we still want to grow your assets. So I think bonds have a place, but mostly I'm going to let the corporate pension plans buy up all the bonds with their insatiable appetite, and then let the companies buy back their stock and drive up stock prices.
Do you know why Phoenix and Scottsdale is located where it is? I was just reading about it today in Bill O'Reilly's book, The Killing of Crazy Horse, because it was right on the edge, essentially the border of Apache territory in Arizona. And Coach East was running the Apaches at the time and scaring the shit out of everybody. So they
corn pop?
What's that?
Did you say corn pop?
No, I said Coach East, not Corn Pop. Different guys. Yeah. So that's why Phoenix and Scottsdale are located where they are, just outside of Apache territory. I don't know how that fits in or is interesting to anybody, but it was interesting to me.
It's an interesting place, let me tell you. I'm a native San Franciscan. It's taken me 12 years to say I don't hate it here.
So in August, do you get the hell out of there and go to the mountains, you said, right? Okay, good. Yeah, that makes perfect sense. Because actually, when I was renting my Colorado home 20 years ago, my brother who lives in Scottsdale, I was like, oh, I'll fill it up in the summer. I got friends who want to get out of here because it's nasty. You don't even go out during the day much, do you?
No, it's terrible and it's depressing. And I mean, contrary to what you've heard, I actually do melt.
Yeah, I could too. I'm pretty sure of that. Yeah. Do you get to Chicago much ever, Nancy, or no?
Yeah, I was just there. Can I come and eat at your restaurant?
Well, the restaurant's 25 miles outside of the loop. So a lot of times people are coming to the city. It's closer to the airport though. So if you're ever coming out and have time, and you would love it, Bobby, that's not an exaggeration, right? People who go there love my restaurant.
It's great. It's great. It's got character. It's been there forever. You know, there's stories behind it. It's really a cool place. It's a burger.
And we bought it because it was a cool place. We didn't make it a cool place. It was a cool place that was going out of business due to cocaine and racehorses. And it was a shame that it was being mismanaged the way it was. And my buddy was the CIO of Motorola. And when Motorola split to Solutions and Mobility, he went with Mobility. And then when Google took them over, well, they don't need the CIO from Motorola. So I knew he was going to get fired. So I roped him into buying it with me, and he runs it. And it's been 12 years next week.
Awesome. And I think it's safer 25 miles out of the loop anyway.
What's that?
It is.
Safer 25 miles out of the loop. So
I agree completely. Completely.
Yeah.
There's a couple more things I wanted. Bobby, you have another question? Go.
No, it wasn't going to be market related. So go ahead.
No, but you go, because I just have one more market related question.
What I was going to say was the last time I was in Chicago, went and saw some friends of ours that had rented a home for about a week. They have a kid in school in Chicago, and they rented a home in Old Town, which used to be like a great place, right? And I just, I don't like to tell people their decisions are bad. My father told me when I was a little kid, never tell someone they made a bad decision, because underneath it, you're telling them they're stupid. So just go, man, I might have done it differently, but God bless, good for you. And God bless is an Italian thing. Hey, God bless. All right. So I'm like, oh, that's, I'm glad he's doing well in school. He likes it here. That's good. That's good to hear. So they rented this house. We went to see him. Next day we went back and ate dinner at my mom's and then left. Next day he texts me, he goes, yeah, we heard automatic gunfire outside of the rental house. The cops were there, but nothing happened. So it's good. A while back, I was riding my bicycle in Southwest Florida, and I got hit by a pickup truck. I ended up under the truck, right? And luckily, the truck was lifted. My bike was destroyed, but I was fine. I mean, I was sore, but I was fine. That's not normally what happens when somebody gets hit by a pickup truck on their bike. So now I ride differently. I don't go on these major streets. I don't cross against the light. He's like, yeah, we heard automatic gunfire outside the house, but I'm sure it's fine. Nothing happened to us. That's the wrong way to think about things.
Yeah, for
sure. A lot of people say, and Jimmy's one of them too. In fairness to him, he works in the city every day, but he stopped taking the L because it's dangerous, right? That never happened to him. He just saw the scenario and said, this is turning against me. So I think I'm going to get out while I still can. And there's his weapon always in his pocket.
This thing is hard, and it's hard too. You'd be amazed.
But
I had to deploy it.
Just like trading and investing, you could make a stupid trade and you can earn money on a stupid trade, but you better recognize it was a stupid trade. Being in Chicago now, you're taking your life in your hands at a higher rate than you used to take your life in your hands. And that's all I ever try to explain to people. It's why I moved away.
It's true.
Right? I've lived in Chicago most of my adult life. I lived 4 years. I'm talking about inside the city. I lived 4 years in Los Angeles, 3 years in a suburb, and 6 months in New York. And the rest of the time was in the city of Chicago. And it's different now. It's just not what it was.
Terrible.
There's no
Same
question.
with San Francisco.
Oh my gosh, San Francisco for sure.
Yeah.
I want to do one more market question before we let her go, though. So we had talked about electricity before. I had a thesis. I just gave a speech at the New Orleans Investment Conference about 2 weeks ago. And I don't like copper very much because copper is so closely associated with China. And I think if we get into any sort of pseudo trade war, it could hurt the demand for copper, or at least the perception of it. I do like uranium, and I bought uranium stocks that Tracy Schuchart told me to. And I think because of AI, because of crypto mining, there's going to be a huge need for electricity.
Always do what Tracy said.
If gold isn't as good with Trump presidency, and there is going to be needs for electric, I thought silver was going to be good, and it has worked out so far. Of anything I just said, do you think anything is an interesting investment thesis in the energy play from the commodity space?
Yeah, so we have a clean energy infrastructure strategy that, it's not hard to beat the iClean, but we've pummeled it. Part of that is we've also hedged. I mean, we own in there some of the names that some of the commodities that you've mentioned. I'm just looking because this is what happens. You guys, I'm way ahead of you, but this is what happens. You like when you're making the decision, you're like, yeah, that's perfectly logical. And then you're like, wait, what did we do?
I asked one of my buddies the other day why I'm long Solana, the cryptocurrency. And he didn't like, I go, why am I long it again? And he probably wasn't the one who advised me on it, but he just knows the way my mind thinks. It was like, okay, let's see. Okay, I remember when you bought it. Here's why you bought it.
But like we own CCJ, for example, and we own we do own copper, actually. We own a bunch of silver. We do own some gold and we own platinum. I don't know that hasn't really played out.
No, I have a good thesis for the Platinum Metals Group. If we are going to be moving away from EV subsidies, when they did that in Germany, EV purchases plummeted 40% year over year in the same months. So I think that if Donald Trump removes those subsidies, which Elon Musk wants him to do, we could start to move back towards catalytic converters. I'm not sure if it's going to be in the hybrid space or just regular old catalytic converters. And I think platinum and palladium could do quite well. So I'm for that metals group. I don't know how to invest in rhodium. That's the third platinum metals group, but I am going to be investing in palladium, and I have platinum already.
Yeah, and we've owned palladium as well, and we've been talking about going back in. It really didn't do well for a long time.
No, it's been flatlining. So I think I know where my stop is. I haven't bought it yet either, and I was very clear in the speech. It has to clear certain hurdles on the upside for me to get back in, which I think it will do, but I'm not in it yet either.
Yeah, no, I think you still want to be exposed to the many of those metals, and even some of the EV driven ones. I mean, copper does trade on China, but I do also think that we're going to continue to see growth in the areas that utilize copper. And so I don't know that the price is going to do much, but I don't think it's going to.
No, and I'm still long copper, and I didn't sell anything. Copper was my big trade for the last 3 years that I've been banging the drum. And I'm still long it, but I'm just not as enthused about the long as
we've been trimming it back too.
Is there anything we missed that you think is important to talk about right now?
The only thing I'm interested in, and it's quick, but is the consumer. You know, they're talking about how the consumer's increasing debt, but they're not talking about how the consumer has deleveraged since 2008, 2009, and we're back to 1995 levels. And I think that gives us a lot of cushion in the economy because people are working, and if interest rates do continue to come down, although the Fed keeps cutting and interest rates keep going up, so
how about it?
There's that. But I mean, I do think that we're going to continue to get support from the consumer, and that may be the bridge on to the tax cuts. To your point, Bobby, if it's not fast enough, what happens? Well, I think we may get a bridge from the consumer for some period of time, which is how we always end up solving these things. But other than that, I think we've covered. I mean, productivities are big. We got the numbers today. That was awesome.
Good.
Labor costs came in much lower than expected. We think that continues. And if we get 100% expensing, as we talked about earlier, I think you're going to see a resurgence in CapEx.
Oh, Bobby, one quick question too. Has there been any talk? I've tried to plant the seed in Stephen Moore's mind and Larry Kudlow's mind about capital gains tax. 23.8% capital gains tax is too goddamn high. Have they even talked about that yet or no? Because that would be a good one.
No, not that I've seen, but I imagine that it's going to be talked about because he's got too many people around him that care about that kind of thing. And I don't mean that as a dig. I mean, the capital gains tax to me is a travesty, but there is talk about an entire new tax structure because one of the things that Elon and Vivek, and I've heard this on the news and also through our back channels to one of those two people, you know which one, that the IRS is one of their biggest targets of Doge. So, yeah, I mean, it is just an outlandish spend. It's an outlandish spend. Something like 25,000 pages of IRA. It's probably more than that. 500,000 pages in the tax code or something crazy like that. But so I'm guessing capital gains tax is in that. I want to throw one more thing in. I'm not going to really say why I like this company for reasons. I don't want anyone to buy it because of the reason that I own it. I've just recently owned it. But I want both of you and the audience to look at Bicycle Therapeutic. Now, again, I am not telling people to buy it. Not saying buy it. I'm saying look at it and read about it.
What do they do?
What's that?
What do they do?
Well, they basically have helped to create something called the bicycle molecule, which reacts like protein to protein in synthesis. And it's kind of got the shape of a bicycle. Yeah, I don't want to go too deep into it because I am not a biotechnology guy. I have never outright owned a biotechnology company. Well, that's not true. I've traded them, but I've never outright owned a biotechnology. My average hold time is 26 days. Well, generally, when this particular stock, I'm looking at maybe 26 years, but I don't know. Take a look at it. Yeah, I don't.
Nancy, will you tell the people where they can find you?
Yeah, thank you. Cut me off.
Not
It needs
recommending anything. www.laffertengler.com. That's it. It's not
And
that
on
cool.
Twitter, you're not particularly active on Twitter. Most people have to come to your website to get your material, right?
I try to be. It's at Tengler. I mean, I'm learning from people like Dan Ives, who posts pictures of himself in every pastel in every part of the world.
What's up with that? Is he just a flamboyant guy, or does he just want to have a bit?
He's kind of like the cat. It's his shtick, I think. But I had dinner with him, and by the way, I was with Steve Moore. I didn't hear anything, and then he did a call for us recently, yesterday actually. I haven't heard him say anything about cap gains.
I'm going to text him right now. Let's get him to start talking about him.
Every
day he's going to get a text.
And I'll text him. But yeah, I'm on Twitter at Tengler, and I'm trying to get better at it. I'm just not as clever as you two.
You're not as much of a smartass. My dad always said nobody likes a smartass. He's wrong. There are lots of people who like a smartass.
Congrats on the viewership. You guys are awesome. I feel really dumb when I'm around you. So
here we go.
Yeah.
Come on,
thank you so much for being here. She's Nancy Tengler. She's the CIO of Laffer Tengler Investments and the author of The Woman's Guide to Successful Investing, which I am very, very interested in because I think there's something very fascinating about gender differences in investing. This has been the Futures Edge. I'm Jim Urio. That's Bob Iacino. Thank you guys so much for joining us. Remember what Bobby and I's history were. We spent 20, 25 years in legacy media. We did not love the fact that we were always at the whim of some overzealous producer or sponsor that was pressuring us to say things that weren't exactly what our opinions were. You might think our opinions are bullshit, but on this platform, they are honest to God opinions. Our goals, Bobby wants to build a successful platform. I want to build a successful platform and grind those bastards into the dust. But I'm a little more angry than Bobby is. Please support our sponsor, Hardcore Italians. Use our promo code FU, which is for Futures Unfiltered. So stop that. But thank you guys for all the DMs, all the retweets. We appreciate this. Is the Futures Edge.